So, those of you that don't know, this is Noah. Noah, you're a loan officer out here in the Phoenix area, and you
Correct.
service where?
Anything Arizona, California, Texas, and then we do investor loans nationwide.
Okay.
But like your like primary residence, California, Arizona, Texas.
Okay. Sweet. Um, Sweet. Well, nice to meet you, dude.
Thanks for having me.
Yeah. No, I seen you on one of our mutual friends'
Mm-hmm.
Instagram. I saw you guys were collabing, making content, and I really wanted to get somebody on here, on that's involved in real estate,
Mm-hmm.
involved in loans, just because doing this job, we're 1099. So a lot of the times, like I've been doing this job since I've been 18, and I've been obviously 1099 since I've been 18. So a lot of the times, like reps, and I'm speaking for myself as well, like sometimes we'll fall back behind on our taxes, or sometimes we'll write too much stuff off, or whatever the case may be. And it's a little bit more difficult to like get a loan for a home.
100%.
So like I'm super gonna enjoy this,
Yeah, we'll dive into that for sure.
for sure. So you said you have a little bit of ties to San Antonio.
Yeah, so my grandma, she's actually kind of in real estate. She's in new home sales out there. And then my dad lives in San Antonio as well. So I keep in touch with a couple real estate teams out there, and I try to go out there like quarterly or a couple times a year.
When did you come back here?
So I'm born and raised in Phoenix, and after college, when I was like 22, I went out to San Diego. That's actually how I got into mortgages. And then I've never lived in Texas, but I have family that's from Phoenix that moved there, and I go see them like quarterly or.
The funny part, I used to, so the door-to-door industry, there's like different products to sell in door-to-door. So like there's like alarm system sales, solar, pest control. I mean, people even try selling real estate door-to-door sometimes. But I used to be in the alarm sales.
Mm-hmm.
And funny part, I actually met the solar people that I work with now in San Antonio. And our office started in San Antonio.
Okay, small world.
Yeah, small
I
world.
could probably learn a lot from you guys because I'm not really a door knocker. The mutual friend that connected us, we're actually doing an open house in Scottsdale on Thursday, and we're gonna door knock the whole area for like 2-3 hours. So you kind of get the nerves, but with solar, I'm sure you guys are probably used to it.
Oh yeah, dude. Good luck. You're gonna
So,
get told to fuck off a lot.
no, I'm going with the girl, so I'm hopefully, I'm hoping they're a little bit more nice,
Yeah,
and
they'll
then
be
I'm kind of
nicer.
like the security, like the
Yeah,
make sure she's okay.
yeah. No, they'll be nice. Yeah, no, knocking doors is hard, dude. That shit's tough.
Yeah,
Yeah, good
for
luck.
sure.
Yeah, if you're with a girl though, and maybe you're talking about real estate, maybe it's a little bit easier. Um, but yeah,
Yeah, we're gonna kind of come with the approach of like, hey, we're selling your neighbor's house. You're welcome to stop by. We got some goodies, but we're not gonna like do too much selling at the door. It's more like introduction, who we are, come by and hopefully buy the house.
nice. Okay, sweet. So where did you go to school? You said you went to college.
I did Mesa Community College, got my associates. Pretty quickly found out college was not the deal for me. Moved out to San Diego. I was gonna start a company with one of my best friends in San Diego, but we moved there February 2020, and as I'm sure you know, COVID happened like 2 weeks later. So the company didn't really work out because could barely go to the store, couldn't even go get a cup of coffee during that time, especially in California.
What company were you?
I was going to start a company that provided like amenity services for like high rises, luxury apartments.
When you say amenity services, like what do you mean?
We were going to start slow, like just doing things like, hey, collecting trash outside your door, and then maybe doing like dry cleaning or like maid services, or just kind of like all encompassing, just making things easier for people that are in like luxury high rises or like in Scottsdale and places in San Diego.
Yeah, San Diego's nice. There's a bunch of high rises out there too that
Yeah.
would do.
There's a lot of money in that kind of business because it's like a subscription. So, you're charging $20-$30 a door. Each complex that you have under contract, maybe they have 300-400 people that live there. It adds up pretty quick, and it's just a few hours of work for what we were trying to do. And that's something I'm kind of still interested in, but right now I'm full in the loan game.
Dude, that's pretty interesting because last night I was talking to one of my buddies. He's in real estate. He does like wholesale real estate. Do you
Yeah.
know a little bit about that world?
Hmm.
Okay, so my buddy, me and him were talking last night, and we were talking about like monthly revenue, right? And we were talking about these home loans, okay? And we were pretty much like, these home loans are like fucking bullshit. You know, like I told him, I was like, I was like, I remember the first time I found out how a home loan actually worked, that like, let's say, and I'm just going to use $100,000 because that's an easy number, right? Let's
Hmm.
say you have $100,000 home loan, and let's say, and I'm just going to use 10%. Just, I know home loans aren't 10% right now, but just 10 and 1 and 0 are easy numbers to work with. 10% of $100,000 is $10,000,
Hmm.
right? So if you have a 10% interest rate on your $100,000 loan, that $10,000, I thought when I was a kid growing up, you know, learning to be, you know, an entrepreneur or whatever, and I'm like learning about real estate and stuff, that $10,000 interest was spread out over that 30 years
Hmm.
with the whole loan. I found out as an adult that 10 year, that $10,000, that 10% is like yearly.
Yeah, it's annual.
Yes, annual.
It's and you know what's crazy? If you look at an amortization table, like how much, because you're not paying the same amount of interest every month as you are principal. In the beginning of the loan, you're paying pretty much only interest. So like the first 2 or 3 years, you'd be pretty shocked on how little you'll probably pay the loan down. I mean, you can make extra payments, but yeah, there's a lot of money in mortgages.
Yeah, yeah. It's almost, so when we were talking about it, it's like designed for the housing market to always go up, because it's like, just like how you said, you'll pay more in interest in the beginning, and interest is like pretty much more than half of your payment anyway.
Hmm.
That it's like it's just designed for the market to go up eventually, just like the way the loan is set up. It's like, so I took over a mortgage, and it was at a 2.7% interest rate on a $535,000 loan.
It's a great deal.
Dude,
It's
great
probably
deal.
COVID when you got that.
Yeah, dude, great deal.
Right.
And this is when I learned about interest. I started looking at my app, and I start like looking at like how much I'm paying towards principal, interest. I'm like, it was like $1,100 was going towards interest, and then 1,000 was going towards principal, and then like a few $100 towards like taxes and escrow or whatever the case may be. And I was like, what? This is a freaking scam.
Yeah,
I'm
I
like, I
mean,
thought I had a good deal at 2%, you know?
yeah, I mean, debt's debt. I'm sure you heard about the 50-year mortgage that they're proposing.
Mm-mm.
So Trump proposed, this was like 2, 3 months ago, it was all over the news. You know, we've had the 30-year mortgage for like 30 years or something.
Right.
And they proposed doing a 50-year mortgage, and everyone's blowing up saying this is a horrible idea because already look how much interest you're paying on a 30-year compared to a 50-year. It's pretty crazy. But in my eyes, debt is just a tool. Like I'm not really, I know my parents and like a lot of the older generation, they grew up with like Dave Ramsey advising them on how they should use their money, and he's always like use a 15-year mortgage, don't have any debt, pay, save your pennies. And that's definitely a great way to do it. But as an entrepreneur, especially someone that doesn't come from money, you can use debt to leverage yourself into positions you may not have been able to get into without the debt. So as like a real estate investor, obviously houses cost a lot of money. You probably don't have 500,000 laying around to buy a house. And yeah, using a 30-year mortgage, you're going to pay a lot of interest over the life of the loan. But instead of putting 500,000 down, maybe you get that house at 20,000 and then get another house at 20,000. And maybe like 100,000, you get like 4 or 5 houses. And get people to get the renters to pay the debt for you.
Pull this a little closer to you just in case.
Yeah.
Yeah, dude, it's yeah. So what do you think about the 50-year?
I think it's just how you use it. I actually made a video on this a couple months ago. You can see on my Instagram.
Okay.
But the difference between just using round numbers, like if you look at a $500,000 loan on a 30-year versus a 50-year, you're really only saving like $300-$400. To me, it's what you do with that $300-$400 that would make it make sense. Like if you're somebody that goes on a 50-year and saving an extra $300-$400 a month, but you're gonna blow it, on stupid stuff, then yeah, like a 50-year doesn't make sense because you're not utilizing the savings it's giving you, and you're paying way more interest over the life of the loan. But on the flip side, if you put that $300-$400 into even the S&P 500, making on average like 8%, like you don't have to do anything, you just tuck it away every month. After 50 years, I mean, that's a long time, but that's $1 million, $2 million that you'd get in investing. So it's just how you use it.
That's interesting. You know what? I do think that I remember seeing that headline with Trump, and I also think he said something about like 15-year auto loans as well. Yeah. I wonder like what's like the incentive behind that, because if the interest rate stays the same, then what, the banks just make more money over time, and then you like make it a little bit more affordable for the consumer, and then the banks make more money. I mean, I don't know.
I think America just runs on debt. I mean, you see our deficit, it just keeps getting bigger and bigger, and that's just how this country kind of runs. Credit card debt is near $1 trillion. If money doesn't keep flowing, it's kind of an issue, and that with inflation and wages not kind of keeping up with inflation recently, they have to make debt more attainable. That's why the 50 years coming out. That's why the 15-year auto loan is being proposed. I don't know if it's going to happen. I don't know if it's a good idea, but that's how they keep money flowing.
You could probably make less money and still qualify for, like, let's say if it's a 50-year loan, and I'm just assuming you're the expert at this, but if you didn't qualify for a $500,000 home and you were like right on the edge, now that it's spread out over another 20 years, I'm sure maybe it qualifies some people for a little bit bigger things as well.
Yeah, it's going to help. It's definitely going to help. It's not going to be like all of a sudden everyone qualifies for a house, because the difference of $300-$400, like if that's what's stopping you from buying a house, you probably shouldn't buy a house in the first place. But it's definitely gonna provide home ownership for some more people, especially like our age. In Phoenix alone, I don't know if you're from the Valley, but my parents bought their house for like $250. Same house, was worth like $600,000-$700,000 5-10 years later. So it's tough for people our age, even if you're making six figures nowadays, to live the American dream, have a home for yourself.
Yeah, dude, it's so like how buying a house it seems so unattainable for a lot of people right now, with the way prices are going and then interest rates as well. I mean, dude, I got a piece of land at a 5% interest rate not too long ago.
And that's good for land. Usually land's a lot higher.
Yeah.
Default rates, like banks don't want to take land back.
Right.
What are they gonna do with land?
Right.
Well, at least a house, they could, foreclose on it, sell it,
but thank God my payment, like it's the piece of land, I think I bought it for $70,000 and I put down like $15,000 or something. So it's not a lot, but even in that payment, I see how much 5% interest is on the payment, so it's, what are you going
to do with the land?
I don't know.
Just flip it or build on it?
I have no idea, dude.
Is it in Phoenix?
It's in Prescott.
Okay, that's a nice area.
Yeah. I have no idea, dude. I'm just going to sit and hold on to it. One of the biggest things that I always beat myself up about is not buying real estate younger. So my buddy that I mentioned earlier that does wholesale, he was like getting into it, and then he was like, hey dude, I need a buyer for this piece of land. And then he was like, I'm going to make a couple grand on it, like for being the middleman. This is one of my first deals. And I'm like, all right, cool. Yeah. I should probably buy it anyway. And like I said, I always beat myself up about it for 20-year-old Ethan for not buying anything or anything like that as far as real estate goes. So I just jumped on it. I have no idea what I'm going to do with it.
Yeah, I mean, how old are you?
27.
27. I'm 28. Like, most of my clients, and these are first-time home buyers. I deal with mostly first-time home buyers. They're like 40, 35, 40 minimum. So we're still super young. It is tough to get a house, but if you put your head down for 2-3 years, you can position yourself, whether it's buying a house or starting a business, very, very well.
Yeah.
It's just a lot of people don't have the discipline and their spending habits, they don't save, they take on too much debt. But
yeah. Yeah, and like when I think about, the reason why I brought up my land is because I think about how much that interest adds just on my small payment for that.
mm-hmm.
I mean, dude, you think about, you try to buy a $700,000 home at a 6% interest rate. I mean, how much interest are you paying on that on your monthly when you start?
I don't even want to look at the numbers.
Yeah,
because no one's gonna want a mortgage.
Yeah, dude, it's probably gonna be a lot. I mean, dude, I want to say the monthly payment on that's probably gonna start like what, $5,000, $6,000.
What's the loan amount?
If it's 700,000 and maybe the interest rate's sitting where it's at right now.
It'll be a little bit lower, but yeah, it's gonna be in that ballpark.
So how did you get into mortgages? So you moved to San Diego.
Good question.
You tried to start your amenity business, and then COVID happened, and you couldn't really move around. So then would you transition? What happened?
Yeah, so I think my first taste of the business was my parents. They were my mom and my stepdad. They were a husband and wife team here in Phoenix for a little bit. They both do other stuff now, but in high school, I kind of grew up with my parents being a real estate team. Really never knew what a mortgage is. They don't teach that in school. I knew like people get loans to buy houses, but that's kind of the extent of it. After college, like I said, I wasn't really a big college guy. I didn't really know what I wanted to do. I just knew that like you should go to college. That's what we're always told in school. So I did the college thing, got my 2-year, which really doesn't mean anything, and then moved out to San Diego with one of my buddies who was very entrepreneurial. We kind of bonded that way. And we were going to start that business where we were providing services for like luxury apartment complexes. And then COVID happened, changed plans. He moved back to Phoenix. I stayed in San Diego. And as a 22-year-old kid with little experience, it's kind of difficult to get a job, especially during a global pandemic. So there was very few industries that were kind of booming. Obviously, like tech, like Zoom, all those type of companies were booming. But at the same time, mortgages, because they were giving away money at like 2%, and every single bank was hiring for loan officers. And I was always super interested in investing, but specifically real estate investing. So, I understood like, hey, you buy a house, you rent it out, you collect the the difference of the payment and the rent. That stuff made sense to me, but how people purchase property and continue to purchase property, for people that maybe aren't millionaires, don't have a lot of money, I didn't understand that concept. So long story short, I kind of just wanted to understand the finance side of the business. And, I was like, hey, I'll do this for a year or two. And then when the pandemic ends, I'll go back to maybe starting a business. And then fast forward 5 years, I'm heading into my 6th year in the business, and I just fell in love with it. Mortgages are like puzzles. It's super fun when maybe someone has been denied by their bank, or maybe they've been denied by a couple lenders. They call you, they're like, hey, I'm trying to buy this investment property, but I'm having trouble. And then you got to kind of figure out like how to make the numbers work and how to get them qualified.
Yeah. Okay, so being a 1099 rep, a lot of our reps, and like I said, I speak for myself too. Mm-hmm. I've been doing this since I've been 18. I've been through it all, ups, downs, whatever. A lot of our reps, we get paid 1099, right? So we have to file our own taxes. We have to, we work off commission only. Mm-hmm. So whenever we go to get a loan, not that it's trickier, but it's definitely different than somebody that has a regular job, right? So 100%. You being a loan officer on the other side, if I have a 22-year-old rep or a 25-year-old rep and they have they've made $100,000 for a couple years, or actually, I'm not even gonna give a scenario. How does a rep at 1099 be able to get a loan for a home?
Yeah, so loans are common sense at the end of the day. You really just need one of three things. It's either credit, income. I'm sorry, you need there's they break down to like three things, but if you can get two of those things, you can get a loan. So it's credit, income, and assets. And like I said, if you have two of those, but maybe one of them isn't so great, there's a very good chance you can get a loan. Like if you don't have great credit, but you have a down payment, you have a source of income, like there's going to be a program out there for you. So with 1099, I'm 1099 myself. I work with a lot of realtors and other loan officers that I do loans for. They're all 1099. It kind of just comes down to how you file your taxes and like, do you have money? Because if you're someone that as a business owner, 1099, you have the ability to write off expenses, whether it's marketing, taking referral partners out for lunch, all that kind of stuff is deductible. So maybe you make, 200 grand gross a year, but after all your expenses, that whittles down to 40,000. You're probably not going to be able to qualify for a house traditionally. But we have investor programs where, maybe we'll just look at your bank statements. So do you have money coming in the bank every month? And, we'll take a little bit of a haircut depending on the type of business. Like if you're in solar, you're probably not going to have a ton of overhead expenses. We'll take maybe just a 50% haircut of everything that's deposited on your bank statements and qualify you like that. But if you're someone that's maybe like owning a trucking business, you're going to have a ton of expenses. We might need to be a little bit more conservative with the calculation.
So, okay, so if I have a rep and he wants to buy a home, do you recommend for him to not be as aggressive on his write-offs with his taxes?
I never like to advise someone how to do their taxes, but what I do advise is like bring me in on the conversation with the CPA or the tax preparer. And before you go and file your taxes, you can send over your loan officer a draft and I could take a look at it. I could send it to an underwriter's desk and be like, hey, if this, buyer files his taxes just like this, how much qualifying income is he going to be able to use, he or she going to be able to use on a loan application? So you get to see like, hey, you need to write off like $10,000 less in expenses to buy the house you want. Or like maybe there's a couple of tweaks we can make with your CPA before you actually go and file with the IRS. So I never like to necessarily like advise do this exactly, but just bring me in on the conversation with your tax person. I work, especially right now, it's January. I'm really tight with a lot of tax people and helping them and their clients get houses.
Yeah. Yeah, I know. Thanks for fitting me in, bro. I seen your story and it's like, dude, you're like so busy. So seriously, thanks for coming.
Appreciate it.
Okay, so then do they need a certain amount of years? Like, can my first year rep go and get a home?
The answer is yes. And it goes back to do you have two of three things? If you have a first year rep, because technically if you go to the bank, they want 2 years. You go to Wells Fargo, Chase, really any bank, Rocket Mortgage, they're going to ask for 2 years tax returns. And if you don't fit that buy box, you kind of don't get a loan. Fortunately, I'm on the broker side and we have a little bit more flexibility. So we don't necessarily have to put somebody on a conventional loan. Conventional loans are always going to want 2 years, but we can do a 1 year self-employed program that is going to ask for a bigger down payment. So you're not going to get the 3 or 3.5% as a normal first time home buyer. But if you put down more money, you can compensate for having less employment history. So to answer your question, yeah, I've helped people that are 1 year 1099 buy houses.
Okay, cool. So, okay, cool. So basically, long story short, if you're a rep out there and you're 1099 and you're trying to figure out like, okay, well, how much should I write off on my taxes? How aggressive should I be? You guys should reach out to a loan officer and involve the loan officer in that conversation and be like, hey, this is my goal. I'm trying to buy a home for this amount. I have this amount of money. Before I completely file my taxes, like, what should I do?
Yeah, and it's hard to find. I do a lot of networking, and we can kind of talk about the networking group in a little bit, but it's hard to find like a good CPA or a good tax preparer. They're usually like in their office. They're not necessarily super social like realtors or loan officers. So it can be hard to get a good tax person, but if you're self-employed, like you need a good tax person in your corner. Like there's no negotiables. Even for someone like myself, that I look at taxes all day, I still have somebody that looks at my own taxes. But for anyone that maybe doesn't have like a tax preparer, they can always reach out. I'm happy to give out a referral. But yeah, that's where the conversation starts, is start filing your taxes, or at least looking at them, and then bring the loan officer in on the conversation.
So I see these videos on TikTok, and basically what the dude will do is, I believe he's a loan officer as well, and he'll write out, he'll say what you need to do to qualify for a $500,000 loan.
Mm-hmm.
Have you seen those videos? And then he's like, this is the income,
Yeah,
is this.
I make some of them myself.
Okay. So is that different? So when you guys are making those videos, is it different with 1099, or is it pretty much the same?
So for that, I don't know exactly the specific video you're talking about, but like if I'm some of those videos are like, hey, I'm making 70,000, they're not necessarily specifying is it W2
Right.
or is it
Correct.
1099.
Yeah, that's exactly what.
70,000, 1099. If you claim the whole thing, it's gonna be looked at pretty much the same as W2, as long as you have the 2-year history. But yeah, if they're not writing off, then yeah, W2 70,000 versus 1099 70,000. Depending on how much you make, you could be taxed a little bit different as self-employed, but 70,000 to 70,000 should be pretty similar.
Okay.
Once you get up to like the higher, like 150,000, 250,000, you're going to get hit pretty hard by the tax bracket.
Yeah.
For self-employed.
Yeah. Can you talk a little bit about jumbo loans?
Yeah. So every county is going to be different. So there's free websites so you could ChatGPT it. But for example, Maricopa County is going to have a different conforming loan limit than, for example, like San Diego or LA County. It's going to be a lot higher because price of real estate's a lot higher there. But anything that is over the conforming loan limit in Maricopa County, I think it's like 806, or they just updated it, but it's close to that. But anything over the conforming loan limit is going to be considered a jumbo loan. And with jumbo loan, you typically need, it's going to be similar to conventional, but it's going to be a little bit more strict. You're going to need a bigger down payment. The rates are going to be higher. It's a more risky loan for the investor because they're shelling out a lot more money on one property than they would if they just did like $500,000 loans. And the debt to income is going to be a little bit more strict as well.
Okay.
But you can do 1099, you can do self-employed. Most of the people that qualify for jumbo are self-employed.
Yeah.
So it's, as long as you got a good tax person and broker, you'll be good.
Nice. Okay. So let me run you through a scenario. So let's say I'm just going to use 800,000. I know you said like 806 or whatever.
Mm-hmm.
Let's say you're trying to buy a home for $1 million, right? And the limit is 800,000.
Mm-hmm.
So basically, if you would need to take out a conventional loan, you would need to put down 200,000 because the loan would be 800, right?
Correct. So if you want to do, like, if you're a first-time home buyer, you could do 3% with conventional. If you want to do that 3%, you would need to get the loan at or below the conforming loan limit. So let's just use easy numbers. In Maricopa County, let's say it's 800,000. You want to buy $1 million house. You got to cover your closing costs and then the 200,000. And then you could put down between 3 and 5%. Otherwise, let's say even if it's just 801, just right above it, then you need to put down at least 10%.
Yeah.
Yeah.
Yeah. Yeah. ChatGPT helps a lot, dude.
Yeah, and they're always, every county is always moving. Every year it updates. So I think it's like 806 or some change for Maricopa County.
Okay.
Yeah.
Cool. Yeah. Yeah. Does ChatGPT stay pretty updated on it? ChatGPT normally does a good job.
ChatGPT is, you got to take it with a grain of salt because it's just pulling from a bunch of different sources, and you know how it is with people posting stuff online.
So how I first heard about you was, or first seen you or heard about you was through a mutual friend of ours. Mm-hmm. She posted a video and you guys were collabing. She's a real estate agent. You're a loan officer. You guys were collabing, making some content together. So then I click on your page, and then I didn't even follow you, but what I followed was the social entrepreneur. So the social entrepreneur, I believe you started that, and
Yeah.
that's a group that you have. Can you touch a little bit on that?
Yeah, that's kind of like my baby. So it's actually 12 months old this month. So I
Nice.
started
Good
it
job.
January 2025. Yeah. It started out because,
I seen you were promoting to throw a company or an event at El Jefe.
yeah, we're going to El Jefe in Old Town on the 20th. So a week from today.
That's so lit.
hmm
I'm like, okay, cool. He's doing it big. El Jefe. All right.
you know what's crazy is I started that with I started it in my apartment complex, and I just wanted to meet some like financial advisors, some realtors, just some other business people in the area. And we had like 40 people on the first event. So I was like, okay, like maybe I'm onto something. And we had some dips and flows, but I started out like little breweries in downtown Phoenix, and then we'd go to like AZ Wilderness, and I don't know if you know what that is, but like just little restaurants around the valley, nothing too crazy. And then um, it's definitely like it's a business networking event, but at the same time, it's not like just one of those like super corporate like business card like suit and tie events. Like we want to make it fun. I think that the best business comes from when you're having fun. Like I've always got my best business like on the golf course or playing basketball, not necessarily like in a corporate office. So that's kind of the same feel we're trying to bring with the social entrepreneur is like you can have fun and still do business. So we've done pool parties, had over 100 people show up at pool parties, different downtown venues. We've thrown events all over Old Town Scottsdale at some of the biggest clubs in Arizona. So it's definitely caught some fire, and we got some really exciting things for 2026.
Yeah, that's so cool. Yeah, I seen that and I was like, what? Like, I'm trying to go to El Jefe.
Yeah,
Yeah.
you should pop out on Tuesday.
Yeah.
It's the third Tuesday every month from 6 to 8.
Okay.
Yeah.
Yeah. Next month, I actually have to go to Hawaii. I fly to
It's gonna be
Hawaii
fun.
yeah. You said you've been to Hawaii before.
I went to Maui twice.
Maui twice.
Mhm.
I'm going to Maui. Yeah, that's where we're going. I'm going to Maui. Should be fun. I've never been.
Maui's like probably like the more like honeymoon spot. Like if you just get married or like want to take someone special, that's probably the place you should do it. It's a little bit like I think they actually filmed Jurassic Park on Maui,
Oh, really?
the old ones. Honolulu, I feel like that's more. I've never been, but from what I've heard, that's more like the nightlife, the city, that kind of stuff.
Have you ever been to Florida?
Yeah, I almost moved there. I was this close.
What part of Florida?
Fort Lauderdale.
Fort Lauderdale? Okay.
Yeah.
Have you drove from Naples, which is like the other side of the
I've never been to Naples. No.
dude, Florida, that terrain is like Jurassic Park.
Yeah.
That's
They could have
right.
filmed there.
Yeah, they could have filmed Jurassic Park out of Florida. I remember the first time I showed up, and I was like driving kind of like on the outskirts of the city. I'm like, holy shit, this looks like it could be Jurassic Park.
Yeah.
It's crazy.
My sister lives in Orlando. I was actually just up there like a month ago. Orlando's cool. I like Fort Lauderdale because you get that like coastal, like young adult. Like I don't know. I don't have kids or I'm not married, so you get to stay away from some of the craziness in Miami, but you still get the same lifestyle.
Yeah, dude, it's that Miami lifestyle, bro.
Yeah.
It's
I don't know if I could do Miami, but Fort Lauderdale's cool.
I love it down there, dude. That's like my favorite. It's my favorite place. If I had to close my eyes and I sold whatever and I just had unlimited money, I would just go move down there.
Oh yeah.
Unfortunately, I have to work and I have to be at different places, but I love South Florida.
For me, it's San Diego, South California.
Yeah. That's where I'm from. Well, I'm not from San Diego. I'm from Riverside, that Riverside area.
Mm-hmm.
So I'm from Riverside. You know where Temecula's at?
Yep, wine country.
Yeah, I lived in Temecula for a little bit.
It's nice there, but there's not a lot there.
Right.
It's definitely a nice place to like grow up though.
Yeah. Yeah, if you're like gonna raise a family, like if I had a kid or something like that, I would go to Temecula. But I mean, dude, young, single, like Scottsdale's cool, Tempe's cool.
Something about San Diego though, I don't know what it is. It's just like it reminds me of like it's a big city for sure. It's like a huge city. But it's like a small surf town. Everyone's like
Yeah.
super chill. You get the city vibes, but 10 minutes away, you're by the beach. There's seals on the beach. It's just, I've never seen anywhere like San Diego.
Yeah, San Diego, that's funny you said that. It is kind of a small city.
Yeah.
Yeah, it's a small city.
Like it looks bigger than Phoenix from far away.
Right.
Like the downtown at least, but I don't know, it just seems like a lot smaller.
Yeah. Yeah, no, I love San Diego. I love Rosarito and Tijuana is like right next store. And my grandparents, they bought some condos in Rosarito. And they're like right there on the beach, and they're throwing a baby shower. How funny.
I know, I heard that.
And they bought those condos for like maybe like 150,000, or they started buying them around like 150,000. They've gotten up to like 300, maybe 400,000 now
In Rosarito.
But it's crazy because it's right there on the beach. You drive 30 minutes north to San Diego, those same condos are like 2.2, 1.7.
Yeah.
Like the real estate difference is crazy between the two.
Oh yeah, it's up there with like San Francisco. It's pretty expensive.
Yeah, I want to say San Diego is probably some of the most expensive real estate like in the world.
Yeah, I helped someone buy a condo a year ago. It was January last year, and he got a good deal, but it was 600,000. It really wasn't anything special. Like it was a nice area. Like yeah, you want to walk around, and like there's families around, but by no means was it like La Jolla or like super nice. 600,000. I think the HOA was like $600.
Jeez.
So his payment was like, it's like altogether with taxes, insurance, like over 5,000.
Like a condo, like in one of the sky rises, or?
No, that's the thing. It was just like a normal like garden style, like something you'd see in like Chandler, Arizona.
Wow.
No high rise, nothing special.
You want to know the crazy part that really confuses me about pretty much everywhere outside of California is like in California, where the nice parts are at because it'll start to get hilly. So for instance, like Chula Vista is considered as not nice of a spot as some of the other areas in San Diego.
Yeah.
If you notice, it's like flat.
I mean, you got like East Lake, which is nice, but other than that, I know what you mean.
And then you start to get up in hilly areas and it's considered like nicer. Right. So like where's the hood and where's not the hood. Out here in Phoenix, everything is flat.
It's spotty.
And you never know when you're in the hood or not.
Yeah. I mean, it's really spotty here. So like I live in downtown Phoenix, and there's a little like box between like 7th Street and 7th Ave and like Roosevelt and like Pierce. But if you walk on the outskirts of it, it's like night and day difference.
Yeah.
But it's a super nice area. Like people go there on the weekends. There's farmer markets, and it's the same thing with like the Biltmore or like Arcadia or some of the nice neighborhoods in Phoenix. There's $1 million houses, and then you'll go 2 streets down, and it's just completely different.
Yeah, it's crazy. I like Phoenix. So like Phoenix, I almost moved to downtown Phoenix. The building, the Adeline. Have you heard of it?
Yeah.
Yeah, I almost moved there.
Right by the Sun Stadium.
Yeah. Right by the Sun Stadium. I wanted to be right there by the Sun Stadium. I wanted to like overlook a stadium, and be there downtown. But I ended up not going. I forgot what happened. I think I had to like go out of town or something like that. And then I ended up being out of town for a few months, and then like when I came back, like a new opportunity popped up. But I almost moved downtown. But I love this area too. I mean, it's decently priced. Tempe is fun. Scottsdale's fun.
Yeah, a lot of people sleep on the valley. Like people know. I think people know Scottsdale by now. That's kind of like a dot on the map. People know.
Yeah.
But I think downtown Phoenix and places like Tempe are like people are hearing about it, and I don't know. I think people think about Phoenix as just like, I don't want to say this because there's nothing wrong with Tucson, but just like Tucson, just like desert, old people, like boring. And it definitely was like that. Like I'm from here my whole life, born and raised. And from going to San Diego in 2020 till coming back in end of 2023, it was like downtown Phoenix had a skyline. It actually started looking like a downtown. Tempe has its own little downtown.
I love Tempe.
Scottsdale's evolving. You got the West Side now, so you got like all these like little cities around a big city, and there's just a lot more fun things to do now.
Yeah. Yeah, no, I love Tempe. Tempe, a lot of people like Scottsdale. Dude, I think Scottsdale's old.
Yeah, I mean, like the Old Town area, there's some young people, but it's expensive to live in Scottsdale, so it's mostly like 30 plus, 40 plus.
But it's like, for what?
Yeah.
Like, it's all flat desert anyway. Like, it just doesn't make sense. And that's what I say, like, and then you drive maybe a little bit south or a little bit west or whatever. There's like no hills or anything. You just drive maybe 10 minutes and then maybe you're in the hood.
In Scottsdale?
Yeah.
Yeah. I mean, South Scottsdale is definitely way less nice than North Scottsdale.
Yeah. Or, dude, even if you go like, okay, I'll say 20 minutes west, and then you pass like I think it's called Biltmore.
Yeah.
The Biltmore Lifetime. Like, once you pass that and you are another 10 minutes the other way, I mean, dude, like, you're in the hood and like you don't even know because you're just drove 10, 20 minutes straight.
Yeah. Phoenix is going through some gentrification. I think it was kind of just like a low income state for the most part. Like, you could get a nice house for like, it's kind of like comparable to Texas. Like, how nice of a house you can get in Texas right now for like 400,000. You used to be able to get that in Phoenix, but I think it's starting to change now. So I think that kind of stuff's gonna get pushed out further and further throughout the years. But yeah, it's still spotty.
Yeah, yeah. Texas. Okay, actually, that brings up a good question. So, growing up, I've always heard, and I don't own a home in Texas, so I don't know, but my family could just be pro California, but they were like, the property taxes are really high in Texas, right?
No income tax. They got to make it up somewhere.
Okay, so then how much is the income tax out here in Phoenix, and or not income tax, the property tax, and does that really make a big difference on the payment? Like, kind of dive into that.
Yeah, I think that is, I mean, in my opinion, and for the last 5-10 years, Phoenix has been one of the top performing real estate markets. And I think one of the things that makes it so attractive is, one, like you said, the property tax. You can get it depends on the area, of course. Every property is different, but you can get a $500,000, $400,000 starter home in the Phoenix Valley, and property tax are going to be under $150 a month. You buy that same house in Texas. You know, I look at a lot of loans in like San Antonio and Austin, and the tax bill might be $10,000 on that property.
It's crazy.
So, and the insurance, insurance in a lot of places in Texas and California, Florida, it's crazy. You know, you might pay $300 a month in insurance if you're lucky in some of those places. In Arizona, you can get away with, again, $150 or below for, $500,000 or below. And so altogether, taxes and insurance, a lot of houses you can get away with for like $300 for escrow.
I wonder where, like, I would like to compare the numbers sometime and like see where that like line would be on comparable monthly price due to the property tax. Like, cause I want to say, and I could be wrong, this would be a good ChatGPT. How much is a property tax in Texas? Isn't it like something ridiculous, like over 10%?
I don't know the exact rate. I know that.
Are there exact rates across the board? Like, if I ChatGPT this right now?
Texas is huge. Every county will have its own, tax rates, and sometimes even school districts will add additional taxes if you're like in a nice school zone. But for those starter houses, like $10,000 isn't uncommon to be a tax bill.
I'm gonna ChatGPT this average property tax in Texas, and we'll just see what ChatGPT says. Gotta love ChatGPT, dude. Okay, obviously it says the same thing that you said, that it varies.
Yeah, because I've seen like for example in San Antonio, you'll be in San Antonio County, but then it'll be located like in a master plan with like a school, and they'll put extra tax because you're in that certain school zone. So it really varies depending on community to community.
Okay.
But it's not cheap.
Yeah. How's the Texas market?
It has slowed a bit. I feel like right after COVID and during COVID, especially places like Austin, that was like the spot to be.
Dude, it was hot.
Yeah, it was super hot with, you got Elon moving Tesla over there. You had a bunch of companies from California moving over there because of the no income tax. So it's a lot more lucrative over there from a tax perspective. But it's definitely cool. Like I have a good relationship with the real estate team, and we're seeing appraisals coming low. We're seeing houses stay on the market for 1, 2, 3, 4 months, and it's just not what it was a few years ago. I think it's going to come back and rebound, but even Florida has kind of seen the same thing. That was during COVID. Miami was like the hot spot. Miami and Austin, and it's still definitely hot. Miami will always be hot just because of what it is, but the real estate value is just, we're getting low appraisals. We're seeing people underwater. I think it's going to rebound, but, that's what happens.
Yeah, Miami and Austin are like some of the best, like hottest spots out. Yeah, Austin, I've traveled a lot, and Austin is one of my favorite cities. Austin, Nashville, Miami. Yeah, I love those cities.
Never done Nashville, but I just went to Austin like 2 months ago. It was a lot of fun.
Yeah, I bet you had the time of your freaking life. You go on 6th Street and go.
I went on 6th Street, and there's another street. I can't remember the name of it. It's like perpendicular to it. It's smaller, but it's super cool.
Yeah, it's such a fun place.
I think it's called Rainy Street. That's the one.
Okay.
You know what I'm talking about?
No.
It's like where all the hotels are lined up, but it's a nice area.
So where do you see, because there's a lot of speculation, and there's a lot of like, I guess you can call it like uncertainty in the market right now, and it's due to like interest rates, and people are saying that people stop or they slow down on buying homes because the prices of homes went up. They skyrocketed during COVID, and then as well now interest rates are literally tripling. So there's like a lot of uncertainty in the market, and a lot of people are like holding off on buying homes.
Yep.
What do you think about that, and where do you see like the market heading in your opinion? I think the Feds just had a call the other day, or not a call, like, a conference, and I want to say they dropped it a little bit, and interest rates finally got below 6%. I want to say they're sitting like 5, high fives.
It depends. It's like gas prices or stock prices. It depends on the day you catch it. But right now, a 30-year fixed, and what is it? We're like January 12th or something.
Yeah.
They're about like 6%, depending on when you catch it. But this time last year, they were 7.25.
Yeah.
And a lot of people that last year are like, hey, we're going to wait for rates to drop. They've kind of already dropped. Like, I could see them going a little bit lower. I know the current administration is pushing for lower rates. I don't think we're definitely not going to see like pre-pandemic levels, like 3%, 4% anytime soon. But, 5.5, 5.75. I think they have a little bit of room to drop, but I don't think they're just all of a sudden going to be like 4% and now everyone can afford to buy a house. And that's kind of the issue that we're in right now, is because when rates were so low, that caused the demand of houses to go up like crazy. Like in California, when I was my first couple of years up there, making offers on homes, you were outbidding like 40, 50 people on the same property.
Oh, dude.
So
it was crazy. I used to talk to this girl. I used to date this girl, and she was a real estate agent. She actually did really fucking good. Like looking back, like she closed. I mean, freak. Her company took us to Cabo. Shout out.
Yeah.
Not gonna throw no names out there, but shout out. Cause she closed like 24 in a year, and she did that like back-to-back years. Like she was fucking crushing it. And I remember when she would put in offers, and I'd like hear her on the phone and we would talk about it. There was like 10, 20 people bidding at the same time, and they're bidding
more.
30, 50 over the market. You know what I mean? Just pushing prices up like crazy.
Yeah, people definitely capitalized off of it, and even paying $50,000 above market in a lot of cases, those that paid out for them. That home prices in Arizona almost doubled over the last 10 years. So it's tough to say. I think rates are going to stay pretty similar to where they've been the last couple months. I don't think that home values are going to drop significantly, if at all. I just think they're going to kind of hold steady until the job market gets a little bit better.
Yeah. One thing that I would tell people that or in reps as well that I talk to all the time, and I'm always like, "Hey bro, buy some real estate, buy some real estate." And they're always like, "Oh, interest rates or whatever." I always tell people like, "Yeah, interest rates might suck, and yeah, I might was joking earlier about it being a scam, but there's been a couple times in my life since I've bought some property that like I had some uncertainty in my job and my income, and the only thing that held steady that would have saved me was my assets.
Yeah.
Like if worst case came to worst and I needed to sell it or I needed to get some money, even if it was 10 grand, like even if I lost everything and I fell on my face and I needed to get 5-10 grand, just to like move on to a next venture in my life, it was due to the property, no matter what interest rate it was at.
Yeah.
So like, and it doesn't matter if you're under on it or not. Like you look at the people that do wholesaling, they'll find you a deal where somebody will give you some money and they'll take it over. So it doesn't matter if you're under on the property or whatever the case may be. You could, if all shit hits the fan and you fell on your face, those assets will help you out no matter what the interest rates are at. So it is a big safety net.
Yeah. And I think the reason a lot of people don't buy and they continue to rent is if you look at it on paper, like a lot of times it is like if you're looking at what the rent is today versus what your mortgage payment would be if you bought a new house, a lot of times the rent is lower. Like it just is. I'm not going to lie, it's not. The thing is when you're purchasing property, you got to look at it as like a 3 to 5 year investment. Like you're not buying it for, okay, I'm going to buy this house and next year I'm going to sell it for all this money, or my payment's going to be way cheaper than my rent. Like if you're just putting 3% down or 5% down, like, yeah, you're probably going to have a decent sized mortgage payment until you start to pay the principal down. But you got to look at it as like a long-term wealth building. Any wealthy person or even people in your family, like regardless of when they bought the house, I have family members who bought their house in like 2007, like right before housing prices tanked and their home value went right back up in 5-6 years. That's super unfortunate, that time and period. But whether you bought your house in the 80s, the 90s, the 2000s, like they pretty much continue to go up. You're going to have some dips, but as long as you're holding it long term.
Yeah, no, like and it doesn't matter if the prices go down. Like people, and that's another excuse that people will throw out is, oh, housing prices are going to go back down. But it's like, bro, who cares? How much are they going to go down?
Yeah, there probably will be years where they're not going up. Like 100%.
But it's like the market is literally like designed and rigged for it to go up. Like just like how we were talking about the loans earlier, it's literally like the loan is literally designed and rigged for housing prices to go up by the way the loan is set up.
Yeah.
Because nobody's going to want to sell their home for cheaper than what they got it for. They're like, oh, I put in 600,000 in it, I want to get 650 or whatever the case may be. So it's all designed for the market to go up. It doesn't matter if it goes down.
Yeah. And you get the depreciation. I think a lot of people don't look at that aspect of it. You get to depreciate your property over, I think it's like 28 years, 28 and a half years.
Can you explain to people how that works?
Yeah. So let's say,
and give some easy numbers to work with.
Yeah. So I'll explain it like in a business way first. So like this building that, like, let's say you guys own the building we're in right now, Solar Pros. You can, like, obviously doors break, paint chips, things just deteriorate over time. You can depreciate, let's say the value is $1 million. You can depreciate that $1 million over an extended period of time on Solar Pros taxes as a business. And let's say they made $10 million in income. And I'm just using random numbers, but let's say they use 50,000 of depreciation. You can offset 50,000 of depreciation of whatever you made that year. And you can either do it up front where like you accelerate the depreciation, like maybe you're only going to have the building for 5 years, you're not going to have it for 30 years, so you don't want to do it over a long-term period. You can depreciate it like accelerated in the first 5-10 years where maybe you're claiming more of the depreciation. And you could do something very similar with your house as a homeowner. And it was just super cool because it's appreciating in value the majority of years, but at the same time, you can depreciate it on your income, and you just get another layer of tax benefits with home ownership.
Yeah, no, it's never a bad idea to buy real estate. Like, it doesn't, it's never a bad idea.
Right.
And just like how you said, 3 to 5 years. I mean, dude, 3 to 5 years goes by like that. I
Mm-hmm.
mean, dude, I felt like I was 24 yesterday, and it's just something you don't think about. And like I said, when everything hits the fan, um, I mean, sometimes your assets is all you got, and it will get you out of and get you back on your feet of whatever.
Yeah, like we see the price of gold, like the U.S. dollar is going down right now. The value of gold and real estate over the last few years has gone up pretty substantially. So it's just you're kind of betting against the U.S. dollar when you buy assets, and
Yeah, dude, it's never a bad idea. And like I say, I beat myself up all the time. And that's when I started like getting into property, because this year or this past year, I was like, you know what? I'm not gonna let this go again. I'm like, I'm gonna be 30 like that. Just like how I was 24 and I thought 27 was so far away. And then now it's like, oh my God, I'm 27 years old now. Like, I'm not going to let that happen and be 30 and then not own any real estate.
yeah,
So, and it's like I said, it doesn't matter what happens to the market, because if worst came to worst, you can just sell it, or somebody will give you something for it, right? Even if the market's down, okay, well, maybe you just keep paying it until whatever best case scenario, you're renting it out, to where it's paying for itself. But it's never really a loss.
and if you're holding it for 3 to 5 years, almost always yes.
Right.
If you're gonna buy it and then sell it in a year, probably doesn't make sense to buy a house unless you're like flipping it and adding value.
Yeah. Do you ever get into any of those?
That's one of my goals. Another loan officer at my brokerage, we're trying to team up and do our first flip. Um, it could be lucrative. Like finding the deal is the hardest part, and also having the general contractor lined up. I've heard so many horror stories about like we found a good deal, we got the financing, and then the general contractor just like screwed up the deal.
My friend that is in real estate that I was talking about earlier, that I was
Yeah.
hanging out with last night, we actually went to his one of his Airbnbs that he just bought.
Mm-hmm.
And it was like maybe a 18 square foot home. It was like 3 bedroom, maybe 1,500 square feet. Um, and he got the whole thing done, like painted walls, new cabinets, um, everything,
Mm-hmm.
floors, the restrooms done with nice tile, blah blah blah. I think he got it all done for like 30,000.
Yeah, it's not as expensive as you think.
Yeah, it really wasn't, and he got a good deal on the home too. It was a wholesale
Yeah.
transaction, and dude, there's money there.
Yeah. The thing with flips is time. Like time kills deals and time eats into your profit. So you want to be in and out of the deal like from start to closing escrow for the buyer within like 2-3 months max. Otherwise, you're usually using hard money unless you paid for cash, and not many flippers I know are buying cash. But the hard money, you're probably gonna pay double digits because it's hard money, short-term loan. So you really only want to make like 2-3 payments max because that's gonna eat into your profits. You can put lipstick on a pig, but it's if you're looking for like flips that all you need to do is the bathroom and the kitchen, like the average person can kind of hire a contractor and do that. But where the real value is if you're like knocking down a wall or like doing something structural, it takes more effort, it takes more work, more experience. But that's when you can see like 6-figure, income on your flips. We had a client at our brokerage, he cleared, and this is why we're actually getting into flipping because we saw this and it was just absurd. But he did a big deal. It was, $1 to $2 million deal, but he cleared 400,000 in profit on
Wow,
the flip.
wow,
And obviously you got to start small, but if you're in there with an experienced general contractor team, especially on the higher priced properties, you can make some crazy profits on there.
yeah, Yeah, no, there's money there for sure. And like I said, I seen it last night. Like he told me that they got the home for like 290,
Mm-hmm.
and they spent like 30 grand.
Right.
Um,
Yeah, he probably profited. I don't know what he profited. Probably somewhere between the ballpark of like 25 to 50,000.
yeah, I think he's gonna try to put it on the market for like 400,000 or
Oh,
something
so he
like
still
that.
owns it.
Yeah, he still
Okay.
owns it. He still owns it. So he still has to do a little bit of things with the backyard. But yeah, he still owns it. We went to it last night because he wanted to like show it to me because I was like, hey, dude, I'm talking to some dude about loans tomorrow. He's like,
Mm-hmm.
oh, dude, I actually just got a new home. Let's go check it out. So we checked it out. And I was like, holy crap, like you got a good deal on this thing.
Yeah, we do financing for fix and flip, and like you can get hard money anywhere. You can get really money anywhere. It's not hard to get money, but I think what sets my program apart from a lot of the other hard money lenders is we will finance the rehab. So let's say you find a deal, it's 300,000. You put 20% down or whatever the lender asks for, and then you need to usually come out of pocket with the 50 or 60 or however much it costs to do the rehab, which can be after you put 20% down, coming in out of pocket with the budget for the rehab can be pretty expensive. Like who has 100 grand laying around that, most people don't want to use that money. They want to invest it, but we can actually front the money. Let's say phase one is 25,000. We'll front the 25,000. We'll ask for proof that, like pictures, invoices that the money was actually used for the work that was said it was going to be used for. And then we'll release the money for phase two and so on and so forth until the deal is complete. But it just keeps more liquidity in the investor's pocket. And also we can actually wrap in the payments. So let's say it takes 3 to 6 months to do the flip, on a hard money loan or a private loan, that's thousands of dollars for even just 3 payments. So having the ability to wrap in those payments so the investor all they got to do is put 20% down. They can get the money for the rehab 100% financed, and they don't have to make a payment until it sells. That's huge because most hard money lenders are not going to do that.
Right. Yeah, no, that's big. So what are like what are some loans or what's like a loan or two that's out there that entrepreneurs should know about, but that probably really don't know about, and that's kind of off the map?
Yeah, I'm actually going to pitch this when I leave here. It's called a 203K FHA renovation loan. So just a standard FHA loan. You're putting your 3.5% down, but kind of tying into the fix and flip. You're not going to flip it. You're going to live in the house, but you can get the money to rehab a distressed property. It could even be a property that maybe isn't livable, like utilities aren't on, or there's holes in the wall, or the roof needs to be redone. Let's say you find a distressed property for 300,000 that if it was fixed up, it might be worth 500,000, but it's just a piece of crap. No one's living in it. Maybe it only takes 100,000 to get it up to 500,000. So you're 400,000 in. FHA they'll let you put the 3.5% down versus like 20 to 25% on an investment property.
At 300,000?
Yeah, at however much you borrow. So let's say the purchase price is 300,000. Let's say you're putting 100,000 for the rehab budget. You'll put 3.5% down of 400,000, but you'll get a full rehab financed by FHA, and you can sometimes even set it up where you can wrap it. Like let's say it takes, there's no rush. It's not like a fix and flip. So let's say it takes 3 to 6 months for the contractor to get the property to be livable. You potentially can even wrap in the payments where you might not have to make a payment during that rehab period. So that's kind of like just a hidden gem because a lot of people don't know about it, and you're literally getting money to add value. So you're right off the bat, instant equity. And the crazy thing is, which even more people don't know about, is you can actually tie in down payment assistance with this program. So you could do 100% financing. I mean, you'll have a higher payment because it's 100% financing, but if you're a first time home buyer,
So you could actually tie in your down payment as well.
Yeah.
Wow.
So you could get a $300,000 property, get $100,000 to upgrade it, and maybe that you're adding 100 grand in equity, and you're not coming out of pocket with anything outside closing cost. And a lot of times you're able to get the closing costs covered by the seller.
Wow.
If you work with a good realtor.
Wow. My buddy, he was pitching me on a house last night too when we were hanging out. And he told me to ask you about a loan. I want to say, and sorry, I'm like so rookie yet.
Yeah.
This is not my role.
Just spit it out.
I want to say he was like, it's a
DSCR.
Yeah, DSCR. So he told me, he was like, hey, this dude wants a balloon payment after 5 years.
Mm-hmm.
He was telling me the price of the home, blah, blah. He's like, but what we could do is we could rent it out. He's like, but we can't live in there because this loan is for this. But he's like, it's a really good loan, blah, 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 blah.
Yep.
Can you kind of explain that loan a little bit and how that works?
Yeah, DSCR. So the FHA loan I just went over, that's like a hack on if you wanted to be a primary residence. The DSCR is a hack if you want it to be on the investment side. So let's say you find a property, but like you're a business owner, you're 1099 and your income's just crap. Like you can't show anything on paper and you can't get a loan from the bank. With DSCR, they will not look at your personal income whatsoever. So no tax returns, no pay stubs, not even 1099s. All they'll look at, and they won't look at your personal debt either. So if you got like 5 mortgages in your name, 2 auto loans, credit cards, like you got a lot of debt, they'll look at your score. Like they're not going to lend to someone with a 200 credit score. But as long as you have decent credit, they'll not look at any income or debt, and they'll just look at the property's performance. So let's say, your friend is buying a vacant property, right? No one lives in it, but he's like, hey, I want to buy this property and rent it out. What we'll do is we'll just look at the projected rental income. So we'll order an appraisal. On the appraisal, there's a form called a 1007. It's a rent schedule. So just like a normal appraisal, how they'll put like sales comparables, like, hey, based off all the sales comparables, we think the house is worth $500,000. They'll do the same thing with the rent estimates in the neighborhood. So they're like, okay, this house you're buying, the estimated rent is like $3,500 a month. As long as the payment is $3,500 or below, you're approved. I mean, you got to have 20% down at least. But if you got the down payment and the property cash flows, which you probably shouldn't buy if it doesn't cash flow anyways, it's approved.
Wow.
It's literally the easiest way to get into real estate investing if you got some money saved up.
Okay, so you're saying if a property is worth, and like I said, I'm gonna use easy numbers. If a property is worth $100,000 and you have 20%, which is $20,000 on that, and the property shows that it will cash flow, you can get this loan.
Yeah.
And then, so he was talking to me about refinancing with that loan. Can you just go into a property that way?
You can refinance too. So you can do it on the purchase side.
So you can actually just purchase it straight up like that as well.
So what a lot of people would do is they'll buy something with, let's say, like hard money, distressed property, hard money, and then they'll either flip it or keep it. If they keep it, they don't want to be in hard money long term because you're going to have like a 10 or 12% rate at best. So they'll refinance out, but a lot of these investors have like 6 mortgages in their name and their debt to income is just shot, like it's 100%. They're not going to qualify for a new mortgage. So they'll go DSCR, and all we do is order an appraisal. As long as the and this is for a refinance too, as long as the estimated rent is higher, or if there's already a renter in there, they'll look at the lease, and as long as the lease is higher than the mortgage payment, you're approved. But you can pull the cash out and go do it on another deal. So you buy a distressed property, hard money, you refinance out with DSCR, and the equity you just built up, you pull the equity out and you rinse and repeat with it. That's what real estate investors do. That's kind of like the hack of not showing taxes and all that kind of stuff.
Wow.
Yeah.
Wow. That's awesome.
It's really cool. That's like my bread and butter. So I do that, and I do a lot of first-time home buyer programs.
How much do you think that El Jefe building is worth if they're putting it on the market?
I mean, the land itself is millions. The building itself, I don't think it's worth it's a decent amount, but it's just the land.
Like if they were to like cut off that square of where it's at, and sell it like a house,
yeah,
it's got to at least be
so
what, 2.5, 2.7.
With you bringing up, like, that's commercial real estate, and that's a DSCR loan is very similar to commercial lending. Because a lot of commercial lending, like obviously you're not going to, if you're building a high rise, your debt to income isn't going to qualify for the payment on a high rise.
Right.
So they're looking at like, hey, what's this high rise or what's this club or commercial building going to bring in rental income? DSCR is basically like commercial lending for residential.
Interesting. Okay.
So like people that are building these stuff in like Scottsdale or any like Miami, these clubs, like they don't qualify with their income.
Really?
No, they're looking at like, hey, this club or this.
But they had enough money to put down.
Yeah,
and it's about like 20%.
Yeah, they usually got to pull up some money. You know, if they
Yeah.
got the down payment, as long as the property is projected to bring in enough income. That's how commercial lending works for the for the most part.
Damn, that's crazy. So let's say I make, I don't know, let's just say a rep makes $100,000,
Mm-hmm.
right? Obviously you can't qualify for a $10 million loan, but if you're trying to build a building like an apartment complex that's 10 million bucks, and you come up with 20% of that, and then you show that it's going to bring in X amount, you can get approved for that.
Yeah. And the
That's
crazy part is the first thing I do is I'll look to see if someone qualifies for conventional financing, because it's just more liquid. Like people's retirements are in like conventional loans, and
Right.
it's a very, very common loan product. So I usually see, can we get this person qualified first conventionally? Because sometimes you can get a little bit of a better rate. But right now we're kind of in a weird period where the DSCR rates are actually better in a lot of cases, and they require way less headache and way less paperwork. So
Yeah, how much are those rates? I would assume that they would be higher if you don't need all that stuff.
conventional, it depends if you're doing a purchase or pulling cash out. Anytime you pull cash out, regardless of the loan program, the rates are going to be higher. But let's just talk about purchase. If you're doing a purchase on conventional, it's going to be, depending on how much you put down, close to 7%. If you do it on DSCR, I just pitched, I think it was 6.5. The guy was putting down 20%, and we did what's called a 3-year prepay. So the higher the prepay, because DSCR, you can set it up with a prepayment penalty or with no prepayment penalty. When we set it up with no prepayment penalty, the rate's going to be a little bit higher. But let's say we put somebody on like a 2 or 3 year prepay. So the lender is guaranteed those interest payments for 2 or 3 years. They're like, okay, this is like a more steady investment. We're going to give you a break on the rate. So you got to kind of talk with the investor, like how long do you plan on keeping this property? Do you want to pull out cash in a year? Because if you do, you don't want to do a prepayment penalty. But the sweet spot I've seen is like 2 or 3 years where you get some great rates, better than conventional.
Yeah. Yeah, no, that makes a lot of sense because, I mean, fuck. There's like, you go downtown somewhere, there's 100 skyrise buildings.
Mm-hmm.
Like, how was there that much money to build that?
Yeah, and they usually run out of money. Like if you see them being built, they usually stop for like a year.
Yeah.
Like I don't know if you lived here, but in Tempe, the West 6, it's like the tallest building.
Yeah, yeah.
When I was a kid, they stopped construction for like 2-3 years because they'll just go bankrupt or they'll run out of money, and then someone will come in and buy it off for cheaper. But
there's a couple towers in Tempe right now that like stopped being built for a while.
Yeah,
there are like 3 of them right next to each other. Do you know which ones I'm talking about?
Yeah, I think there's actually 4 right by Tempe Marketplace.
Yeah. They had to have ran out of money.
Yeah, they usually do.
That happened with Trump one time too, down in Mexico. I remember me and my family were driving down to our condos, and we were passing by one of the towers, and it like kind of stopped being built.
Yeah.
And I was like, why did it stop being built? And my family was like, oh, Trump, bought it. And then, I think they ran out of money, went bankrupt, whatever. And I'm like,
it's super common.
Really?
It just takes so long. And I mean, commercial lending is a little bit different. You can set it up where maybe the first 2 years, to make it cheaper, they'll do what's called like temporary buy downs, where let's say the market's here, but the first 2 years they paid a little bit extra upfront and they got the rate down. And then like second year of construction, the interest payments will start to kick in, or however long that buy down period ends, the interest will start to kick in, and usually they run out of money.
Nice.
So
sweet.
Yeah.
Well, dude, it was nice. It was nice having you on. Thank you.
Appreciate you having me.
Thank you so much for coming. So real quick, before we head off, what's the next event for the Social Entrepreneur?
El Jefe, January 20th.
Okay.
6 to 8 p.m. Old Town Scottsdale.
And then any plans for it moving forward? Anything anybody should expect? What's the handle for the social entrepreneur?
The Social Entrepreneur PHX.
Okay.
Yep.
And then where can they find you if one of my reps is watching this and they're trying to buy a house, or they're trying to get a loan, or if somebody comes across this and watches this and they're trying to get a loan, how can they find you?
Loans by Noah is the handle. My Facebook's just my name, Noah Shirtlift, but all other platforms, Loan by Noah.
Okay.
Loans by Noah.
Sweet.
Yep.
Well, thank you so much for coming on, bro. I really appreciate it.
Thank you. Appreciate it.